When we are trading trends, our goal is to identify the areas on the chart where price will generate strong momentum. When the trend is creating a series of higher highs and higher lows, our job is to buy low and try to predict where there is the potential pullback that will generate strong momentum. Now, most traders are struggling to identify these points on the chart, but if you're knowledgeable of price action rules, you will find that these points on the chart can be found fairly easily and they can generate a high probability setup. And in this video, we'll go over how we can identify and spot these high probability turning points. Before we start talking about price action, we will going to plot 21 bar exponential moving average as a supportive indicator, because this indicator allows us to spot a high probability setups as well alongside with price action tools. This indicator is serving as a key entry point, and once price is trending above 21 bar exponential moving average, this is indicating to us that we are safe to buy. Now, as a price action trader who is relying on the naked candlesticks as they are printing on the chart, I need to correctly identify what is the bias in the market, and I need to use my price action tools to help me identify the current structure. So this is the pre-market analysis that I have to do if I want to have a proper understanding about the structure. And what I can do, I can see that we have a one steep leg and then price flattened but kept creating series of high highs and high lows. So right off the get-go, this is starting to look like a spike and a channel pattern, because the first leg is very steep, it's barely pushing to the exponential moving average, but the second leg is much flatter, indicating that price is pulling back much stronger, and overall it is not so steep and not so clean. So what I have to do, I can see this swing, I can see this swing, I can see that highs are working in a geometric formation, lows are working in a geometric formation. So my job is right now to identify the proper trend line that has the most touches. So the first thing I did this morning, I located a trend line that would fit something like this. I'm just copying it, putting it at the top, and this is a spike and a channel pattern. You guys can see how nicely this trend line is confirmed off of these lows. First two swings set up the trend line, and third swing is the confirmation of the trend line, indicating that this trend line is valid. Now, at this point on, the structure is bullish, and I'm only thinking about with long entries. So as the price is pulling back lower to this key entry point, I expect to get another bounce just as I did here or just as I did here. But you guys can see the trend line didn't hold price. Instead, price pushed lower and then had a downtrend working lower. Now, this is a downtrend, and I need to find my trend lines for their corrections as well that goes against the entire trend, because the trend line rule apply not only for the bigger patterns, but for the shortened ones as well. You guys can see we have a shortened downtrend working lower. There was a break and new extreme form. Also, this is the first leg working lower, pullback, second leg working lower. Market likes to move in pairs of twos. If you train your eyes to see this, you will have advantage over other traders. So we have a first leg down, pullback, second leg down. When I was watching break of this major channel today, I expected to get long entry above exponential moving average, because I treated it as the first break of this bigger pattern, and I expected, according to trendline rules, to get new extreme. But you guys can see price pushed higher, but eventually bear stepped into the market and created a new extreme for this overall downtrend. After price pushed strongly above EMA, and this is important, this strong push above EMA, this is how you can use the EMA that will tell you the change in the momentum. This push above EMA indicated the buyers are coming back, and we expect to get new extreme, because overall big pattern, the bigger pattern is the strong bullish bias. This is just a shortened pattern. So what I have to do, I have to draw the shortened trend lines as well. And now that we're pushing above EMA, I'm looking for high probability setup. I'm either looking for failed second entry short, or I'm looking for second entry long. And this is the highest high of this entire leg working higher. So this is where I start counting and I reset the count. There is a pullback working lower. There's the first entry long above this bar right here. It instantly failed, and price created a second entry long above this bar right here. But I cannot go long above this bearish bar. If I want to go long, I need to go long above bullish bar. I need to see a good confirmation of the momentum, and I need to take a with trend entry. So I'm sitting patiently here on my hands. I'm drawing the shortened trend line. I'm drawing the shortened trend line tight. Why am I not drawing the trend line wide like this? Well, first of all, if I draw it wide like this, it doesn't really fit neatly off of these first few swings. This tight one really fits nicely off of these first few swings, but mainly because this downtrend is just a correction of the overall bigger trend. This is the bigger trend, this is the short-term correction, and overall bias is bullish. So notice what happened. This was a very minimal second entry long above horrible bar. Price pulled back and created a double trap entry, because everybody who went long on a bad signal bar got trapped, and everybody who went short too early, they got trapped as well. This uptrend needs new extreme, and the bigger pattern needs new extreme as well. You can look at it as a larger two-legged pullback on a larger scale, and this is great high probability setup, great bullish bar confirming the momentum closing above EMA, great price action setup. This was my first trade for today. So you're combining the overall knowledge about the structure, you're combining it with the exponential moving average that it closed above, and you need to get new extreme according to trendline rule. Now notice what happened. Price created a new extreme, but price kept pushing slowly higher. Since the bigger pattern still needs to get new extreme, what I can do, I can use the first couple of swings to identify a smaller channel. And I can see that we have EMA holding and a trendline holding, and price created new low form, first entry short, second entry short, new high, first entry long, second entry long. Now, there's a double top, so you have to reset the count. So this is technically just a first entry long. This was tempting entry to try to take, but you have to be careful entering directly into highs like this. You guys can see it's getting very veggie. Resistance in play, trendline in play. You have no room to the highs. If the bar closed a little bit lower like this is exactly what price needed to do. Notice, if you go long directly into double top, price pull back, and then when there is an entry that is much closer to EMA, price eventually created the scalp. So there is no entry here because you have no room to these highs and it's getting a little bit stacked. But the bias is still bullish. Even though we have a break in a new high, price is pushing below EMA. Now this confused me a little bit because after breaking a new high and a push below EMA, I expected to get a failed second entry long. But as strongly as we push now higher, this is where I switch the gears instantly again. And sometimes you can do this. Sometimes the setup may look very bearish and end up being very bullish because there was a break, attempt to create new low and strong push above EMA, just like here, indicating we're truly going to get new extreme. Notice how important it is to keep marking these short-term trend lines as a corrections because you want to let these corrections play out so you know that you're safe looking to go long. Price pushed strongly above EMA. This is the lowest point where we start counting, and we're only interested in high probability setups, and high probability setups would be variations of a two-legged pullbacks. So we have a first entry short, pullback, second entry short. Second entry short in a downtrend is a high probability setup at the key entry point, but this is not a downtrend, this is a bullish structure, so this is against the trend. So we're looking for every second entry short near key entry point to fail and take it as a high probability setup, and we have a failed second entry short in uptrend, decent setup. Now this setup closed a little bit further from the EMA than I would like. I didn't take it myself, but looking back at how nice bullish the signal bar is and how strong the uptrend is, you still need a new extreme. Definitely one of those better entries to take a chance on is a failed second entry short above EMA, and the price kept pushing higher. Now you guys can see the price keeps pushing higher strongly. There is a likelihood that there is a bigger pattern in play. And when you're trading trends, your goal is to identify what is the bigger pattern. There may be bigger pattern something like this, or there may be even bigger pattern something like this. It doesn't really matter which bigger pattern you find because you're using these bigger patterns mainly for bias. You're most likely not going to get a lot of confirmations and bounces off of these bigger patterns. You just use it for bias and you mainly focus on the EMA or on the medium channel. So you don't have to be too worried about not having a bigger pattern. Today I wasn't really able to identify the perfect larger pattern. I was just playing these medium channels. Price created highest high, first entry long, pullback, second entry long. We have a break, new low formed, indicating that this downtrend played out. It is a two-legged pullback, high probability setup. It is at the key entry point. It is at the exponential moving average. It is with the direction of overall trend. The market is indicating to you that this is a great entry to take. I was almost about to take this entry. It looked very bullish, and at the very last second it closed doji like this, which is what scared me from taking this trade right here because we already reached the new high. So if I'm going to take second entry long after this spike in the channel and reach the new extreme, I need to have the great looking second entry long because it is quite aggressive to take it after you have a new extreme. But this is a strong bullish structure, so there is no denying that we may eventually keep pushing higher. But since this ended up doji like this, I hesitated. I'm going to mark it if you had better signal bar on your chart. I mean, under the strong trend, you pretty much can't afford to take slightly worse signal bars. It is such a nice two-legged pullback. Even downtrend played out with the break and then first leg pullback, second leg high probability setup, pure price action. You don't need no cluttered indicator mess. At this point on, price is pushing higher. And once you keep creating multiple new extremes, this is where you have to identify that this channel was not too big and there's a probably additional channel working higher. This was the channel that I was looking for, and I think the channel ended up being slightly different like this with mediocre break here, because trend line got confirmed right here, which would be hard to find at the time because I was looking for a slightly wider pattern. I'm going to keep drawing the short-term trend lines, and we have a new high, first entry long, second entry long. However, now I don't like this entry because it seems a little bit too overdone. It seems like there's a time for correction. You guys can see it stalled a little bit, but you cannot go long here anyway because the signal bar is bearish. You cannot go long above bearish signal bar, and you cannot go long above such a big bar like this because the risk to reward is not the greatest. At the same time, you cannot buy at the very highs. You want to buy the market once it's pulling back. You want to buy low. You never want to buy market close to highs. This is how a lot of times beginner traders are getting trapped because they're chasing the market. They're not taking these early entries. And once finally they decide to take entry, it's already way too close to highs and price needs to correct a little bit. So even though there are a couple of trades that would have worked for scalp, couple of second entries, you cannot enter in this consolidating structure. EMA is getting flat. It's getting in the middle of these bars. And this is a horrible overlap and you cannot take entry. The way you trade congestions is you fade the breakout, price broke lower, you fade it, so which means if it breaks to the downside, you're buying the breakout, but you wouldn't have the trend line yet. And honestly, you would be expecting for price to create additional pullback down to the trend line. So this is hard for me to market. This is only looking great in hindsight because you don't have the trend line here yet. And overall, it's still kind of part of this overall congestion. So it is just better to sit on your hands, be patient. There are going to be trades and you don't need to force entries. At this point on, I only took one trade and I've been sitting here and waiting. It's a shame. I almost took this trade right here, but unfortunately didn't really set up perfectly. Now price keeps pushing higher and the same dilemma here, just as was right here. We're kind of feeling overbought, but notice how we're getting stacked. We have a new high, first entry long, pullback, second entry long. But this second entry long is close to the highs. It's not touching the EMA. At this point on, you have to be cognizant of a potential trading range. So similar situation right here. I didn't like taking the second entry long, which is the best entry because by this time the price isn't so congested, but you're not even touching the EMA. You're kind of in the middle of the air. So I don't like this entry. A couple of traders took it and barely scalped out. I recommend being patient here. And by the time you get this entry right here, now you have 20 bars working sideways. This is basically a repeat pattern of this. Such a juicy signal bar. The couple of traders took it and unfortunately got trapped. But at this point on, market feels a little bit too overdone. It's too congested. And I really don't think that you want to risk entries here and here. Now, as the price is breaking, this downtrend working lower, I am anticipating for this downtrend to get a new extreme after break. But at the same time, when you're trading strong trends, you have to zoom out regularly and remind yourself what is the bigger bias. This is the bigger bias. This is what you're focusing on. You're focusing on looking for big patterns. So you get the idea what the bias is. You're focusing on the EMA and you're only sticking with longs. You're not even thinking about counter trend entries. And every single bearish downtrend is a reversal attempt, and 90% of these reversal attempts will fail. Every single time price tries to push below EMA, it instantly pushes back up and the uptrend is continuing. So you never really want to be caught on the wrong side of the market. So now that the price is pushing strongly above EMA like this, I want to go long safely after failed second entry short. I need to see price push above EMA, confirm the bullish momentum. I need to see EMA holding price and give me a failed second entry short, because second entry short in uptrend is going to be a trap. And we have a new low, first entry short, pullback, second entry short. I treated it almost as a one leg because it looks kind of like a first leg, pullback, second leg. So I didn't like going long here. On a micro level, this is technically first entry short, second entry short failure, but it closed below EMA. So I think it is a little bit more aggressive. You really want to see price to close above EMA, because at this point on, since you're still below EMA, this is still giving you information that you may potentially get the new low of this downtrend. You have no idea that you're not going to make additional push down. Only after price pushes above EMA, now you get the confirmation that the buyers are resuming and the market is going to continue working higher. So it's a little bit aggressive, and I don't think it's the greatest entry to take right here. At this point on, we still expect to get new extreme of this overall pattern. Notice how the simple trend line rules are keeping you on the right side of the market. I'm drawing even the trend lines for the short-term corrections. There's a break, there's a new extreme, you have a two-legged pullback down, and you get the similar pattern to right here. This could be almost marked green. You know what? I'm going to mark this green. I'm looking at it so much. The only thing, the signal bar, but there's such a high chance that it's going to work. But here we have a similar pattern. Two-legged pullback, second entry long, big bullish bar. You're expecting new high. Downtrend played out with two legs to a new extreme. You close above EMA and market is continuing pushing higher. At this point on, I drew my trading range because I'm expecting to get a little bit of a consolidating structure before we keep pushing higher. This is a lot of times how the price action will react, but you guys can see we never even came down. We just ended up pushing higher. As the price pushed higher here, I was expecting to get a high low above EMA, high low that would confirm the second entry long. I never got the high low that would confirm the second entry long. It was a horrible doji that closed below EMA. Then price offered us a failed second entry short, but it formed horrible. It stacked, so there is no entry here. Notice price created a new high, first entry long, second entry long, but the stop loss has to go here. It is way too big. And then price pushed higher above EMA and gave you a higher low, which is now a decent entry, because this is basically what you're expecting here. You have a second entry long, you have a first entry long, second entry long. Price pushes above EMA, price pushes above EMA and give you a higher low. So this is a confirmation of a two-legged pullback. It is above the exponential moving average. You can see why the EMA is so helpful. The EMA is holding price, and as long as it is above exponential moving average, this is telling us that the uptrend is still in play and we are still safe to be looking for longs. This is a nice bullish bar. It's stalled a little bit, slightly stacked, but definitely worth taking the risk. Failed second entry short is too close to these highs. I recommend being patient here. Price created a break. At this point on, I'm using a trend line like this because price just keeps pushing higher and I just need to keep looking for these key entry points. Although I'm looking for a bigger pattern, the larger pattern never really got today a good confirmation for me to find entries off of it. So basically just for the bias, and these short-term trend lines, these medium ones, are for key entry points. This was my second trade for the day. This second entry long right here. I took this trade and I'm going to tell you why I liked it. You guys can see it is slightly aggressive because we now created the new extreme for this medium-sized channel. But notice how EMA kept holding price. If this is a trading range, there's a bullish imbalance because we just keep creating series of higher lows. So we just keep pushing higher and you know that shorts are getting trapped. Probably there are a lot of top pickers. They're trying to pick the top. We created a new high, first entry long, pullback, second entry long. We first trigger lower and then reverse up. And this is what I liked about this trade. I wasn't so keen to go long about this second entry long, but once it triggered lower, looked very bearish and then strongly reversed back up. This is kind of like the second confirmation of second entry long. This is why I like taking the entry, barely scalped out, and market created a pullback. But I liked it because downtrend had a break, attempt to create a new extreme. EMA kept holding price, and notice this big bearish bar. Everybody got trapped. Another gorgeous bearish bar. A lot of traders are going to get trapped going short and trying to pick top. There was additional last little pullback break, new low, and I was anticipating here because at this point on, I'm really thinking that the market has a new high. I was anticipating same thing here, same thing down here. I was anticipating to get failed second entry long, but as price strongly pushed above EMA, then you have to switch the momentum and you need to think bullish. There's a new low, micro double bottom, which resets the count. First entry short, second entry short, failure, but it stalled a little bit. 1, 2, 3, 4, 5 bar stacked. This is quite tempting entry. At the time when I'm watching right side of the market like this, I'm at the highs, I have a double top. I just created a new high of this medium channel. It's getting a little bit veggie, so I'm not a big fan of this entry. I mean, it is very tempting, but when you're watching this live like this, it's a bit difficult to justify this entry, but your idea is correct. Now, and there was a tricky entry right here because as price kept pushing higher, I extended this trend line because I figured price is more bullish than it was, and this is why you cannot really extend the trend lines so quickly. This was the channel working higher. We had a downtrend working lower, strong push above EMA, and we had a first entry short, second entry short failure, and we have a new high, first entry long, second entry long. Now this entry I consider a fairly decent entry following the rules because we pushed above EMA, confirming bullish momentum. It is a second entry long and a failed second entry short. This entry would have failed, but I still like this entry. It is following the rules. There are a couple of clues that would have kept you out of this. You're going a little bit sideways. You're not really touching the EMA perfectly. And this bearish move was quite strong. But if you look at the right side of the chart, look at this. you see such a massive uptrend, you see such a small bar, you're really thinking that after such a strong push above EMA and a bounce off the trend line, you're potentially going to create at least one leg up, because this is the first leg, so this is the measured leg, pullback, second leg, this is what you're expecting. Price barely created the new high and then strongly reversed. But when you're on the right side of the chart like this looks very tempting. After that, there really weren't that many setups. I marked this lower high because it is now all 2 key entry points. I was still expecting for price to push above EMA and still continue pushing higher, because this was such a strong bullish structure. You're potentially expecting for price to keep pushing higher. But this downtrend, you can't ignore the downtrend. So this is a valid downtrend. You had a massive overshoot, which a lot of times lead to a break of a trend line or straight up reversal. And by that point, you're getting very close to the close of the market, especially on a Friday. You don't want to be trading this late. You don't have a chance to make it back, and there is a weekend ahead of you. So you will have to be thinking about a loss if you make it at the very end of the day, which is what you don't want to do. When we are trading trends, we also need to make sure we are entering on the corrections. We don't want to enter too close to highs because price needs to correct. And here we have 3 situations, and we have a 2-legged pullback here, 2-legged pullback here, and a 2-legged pullback here, second entry long. Notice that this first second entry long strongly pushed higher, indicating that this 2-legged pullback is a great setup. Then we had a 2-legged pullback here that barely pushed higher, but price continued stalling, consolidating, going sideways, and this is an indication that you don't want to take any long entries after that. Same thing right here. We have a second entry long right here. Instead of price pushing higher, just like it did here, it stalled a little bit in an event into consolidation. Same thing right here, indicating to you that you don't want to go long here. Same thing, like you don't want to chase any other of these longs. Sometimes these longs may work for a scalp, but you guys can see sometimes they may not. So observe these 2-legged pullbacks, observe how it stalls, because if this is a healthy 2-legged pullback and there's still room with the direction of a trend, price is going to keep pushing higher. But it can happen that the second entry long will barely scalp. It will go sideways, indicating lack of momentum. And this is also indicating that the trend may be a little bit overbought for a short period of time, and eventually you need more room for price to correct. I'm going to see you guys in the next one. Take care, everybody.